We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Lawrence Lepard from EMA2 Equity Management Associates. How are you today, Larry?
I'm great, thanks. How are you, Tom?
I'm good. Good to have you back, and looking forward to digging into some of these topics with you here. We were kind of mentioning before we hit record here that there's so much that has changed since the last time we spoke.
Right. Yeah. I think there's enough going on.
Absolutely. It makes everything that we talked about last time seem almost irrelevant in some ways, right?
It really is. It was an earthquake. I mean, Putin's move was really an earthquake. Mm-hmm. I don't know. Where do you want to start?
So, kind of on the lines of Russia, they've slowly been announcing week by week more and more moves away from the dollar, starting with saying that hostile countries could start buying its gas with rubles and now in gold as well. So where do you think this road leads, Larry? Do you think that we can see a gold-backed ruble? Like, where does this lead to?
Very possibly. I mean, it certainly leads to higher ruble prices and higher gold prices. I mean, the Europeans are kind of whining and saying, well, we're not going to do that. And Russia's response was, okay, well, on March 31, we're going to cut off the gas. We're not giving it to you for free. So you can decide whether you want to pay with rubles or gold or no gas. We'll shut the pipelines down. To back up a bit, I've said this in other videos, but just reiterate it. I mean, I think what just happened with, Russia, and, I no way condone any wars or any behavior on the part of these guys, and Putin's not a good guy, but what just happened with Russia, though, is similar to what happened to De Gaulle in 71. The French really pushed us off the gold standard. They forced Nixon to abandon the gold backing of the dollar at the time at $35 an ounce. The reason is that our gold reserves in the United States were getting, drained very quickly. And Nixon realized that they were critical, and so he said, well, I'm shutting that window. And so it's a little different, but it's similar because I think what Putin did, I think he did the calculation and he said, these guys are highly levered. They need stuff. I'm a big provider of stuff. They're behaving in a way I don't like around a country that's a satellite of mine. They're, potentially trying to get them into NATO and put missiles near my doorstep. And I'm going to hit them economically. I'm going to basically say that I'm not going to sell my stuff. If that's the way they're going to behave. And of course, the minute he declared the war, the United States responded with huge sanctions and shut down the SWIFT system. But probably more importantly, I think it really was an earthquake. I'm sure Canadians can relate to this because what your Prime Minister Trudeau did to the truckers was kind of an earthquake. He just kind of said, look, if you're behaving in a way we don't like, we can seize your money. And Trudeau said that you support the truckers, we seize your money. I mean, that's no due process, no courts, no nothing. Well, the United States just said that with respect to reserves stored in the Western financial system. So obviously Russia had all these financial reserves, and we just said, nope, sorry, we're freezing that. And
mm-hmm.
It's one, it's breaking the law. Two, it's theft. Three, those are monies that they earned fairly. And so the war really is a kinetic war, obviously terribly sad. But on the monetary side, it's actually even more interesting because it's really a monetary war as much as it's a kinetic war. I mean, hopefully the kinetic war will kind of get sorted out and calm down. I don't know because of crazy people on both sides of it. But on the monetary side, it really is an earthquake. Because what Russia provides in terms of both oil and gas and food, wheat and Ukraine as well, is pretty essential to the world functioning. You can't just take it all offline and expect the world economies to not have a serious problem. And they're going to have a serious problem. There's going to be a food crisis, I imagine, from what I can see. Mm-hmm. And I think Putin accurately calculated that the gold suppression, the Western gold suppression scheme, and that the Western fiat currencies were what have allowed the U.S. to kind of dominate the world and live at the expense of other people. I mean, the point that De Gaulle made was that Americans have an exorbitant privilege. Everyone else in the world has to work to produce services or goods, to get $100, and the Americans can print one. And that's why so Americans live better than the world as a result of that reserve currency status. And so my sense is what happened is Putin finally came to the conclusion, I've had enough of this. I'm not selling my real stuff for fake paper. I'm going to withdraw from the game. Let's see how you guys do. Mm-hmm. And the thing that's interesting to me is the West has reacted with demonize him. He's a bad guy. This will never work. We've got all the cards. But in fact, to me, it sounds like they kind of know that he's made a pretty powerful move, and they're whining about it a lot, and they're trying to demonize him. But the fact of the matter is, it was a pretty good chess move, and the West is going to have a serious problem in dealing with it. Is kind of how I see it, and it's enormously bullish for the sound money thesis, for the gold and silver thesis, because it's a sovereign nation, with nuclear weapons saying, we call bullshit on this fiat. That's what he's basically done, as I see it. Mm-hmm. So, and it's enormously positive. Short term, it hasn't been so great. I mean, it's kind of like, things are kind of bouncing around. We got a nice pop up above 2,000 a little while ago. It's correcting again, and this is pretty normal. I mean, I'm sure that the U.S. government and other governments have been printing paper gold and paper oil, to try and get everything under control and prove that they're still in control. But in the longer run, the markets are going to win out. It's paper gold is not real gold, and they're going to demand delivery and settlement, and you can't deliver paper. So, it's a big deal in my opinion.
Larry, when we think about, like you say, the kind of, in some ways, the end of this fiat era, how are other countries kind of treating this as well? Like this de-dollarization. We've seen India among some of the first countries to kind of switch away from the dollar. So is this a theme that you see really continuing?
I've seen this for a while. And of course, anyone who reads Luke Gromen, he's been talking about it for quite some time, and very intelligently. I mean, you also see the Saudis saying that they're going to sell oil for yuan from China. The Indians were talking about using, rupees to pay for things. And so, the trend has been there. I mean, the dollar used to be probably 98% of every international transaction in the world. I don't know, it's 10, 15 years ago, and it's fallen. I don't know if it's how big a percentage it is today. It's a lot less than that. It's in the 80s, maybe 70s. People are setting up other trade agreements. And I think the important thing to realize is also it's not just what you trade in. I mean, as we all know, you can click a button and convert from one currency to another in a minute, in less than a minute. So people may still trade in dollars, but the minute they get the dollar, they immediately turn around and change it into something that they know is going to hold its value better than the dollar will. And in my opinion, that's, gold and Bitcoin are kind of the two natural things, the natural possible neutral reserve currency on an effective basis. Commodities as well. I mean, the other thing that we've seen in this fiat era, and there's such a great chart on Twitter, everyone can see it. It's just Google the GSCI compared to the S&P. And, commodities have just been incredibly cheap now relative to financial things and fiat things for a long time. Mm-hmm. And therefore, we've underinvested in commodities, and it's really showing up. And suddenly we got shortages of everything, and prices aren't just going up a little bit. Prices are going up a lot. I mean, if get on my Twitter feed, look at some of the fertilizer prices, ammonia prices, et cetera. I mean, things are going up 30%. They're going up 5x. It's crazy. And it's not, people say, well, it was temporary. Originally, the original excuse was, well, that's temporary. It's because of COVID and supply chain issues. Well, COVID's kind of died down, and yet the problem has persisted in steel, in many commodities. I mean, nickel. You saw the nickel market blew up. I mean, that could be a prelude to what's coming in silver and gold. So it's, we have, the tide has definitely turned, and the trend is now toward higher and higher commodity prices, and I think weaker prices for financial assets. And I think that's what really all of this is about. And you still see some people who are investing in the rearview mirror and claim that deflation will return. I saw somebody put up the inflation swaps from 5 years out, from 2027 to 5 years plus 2032, and they're in the mid 2.5 range. So that's the market today thinks in that time frame inflation will be back at 2.5%. I don't think there's any way. I think in fact, we've been nothing but surprised by how high inflation has been and how it has beat expectations. And I don't really see any reason why that trend is going to reverse. I mean, at some point it will, certainly, and maybe there'll be pullbacks. But right now, if you look at any inflation bet, you got to take the over, because it seems like, just about everything you see is going up in price very rapidly. So, which is not surprising when you add 45% to the, to the money supply of the United States, in a 2-year period. I mean, that's going to happen, right? Mm-hmm. So. Well, it's nuts.
It really is, and I think that's a Quite an understatement, Larry. But there's a lot to get to there that you gave me in that answer. So, do you see a scenario where the value of the dollar appreciates greatly from here? I looked. I know yesterday it was at somewhere around 99, the DXY. Yeah. So, just to take the other side of the argument, do you see a case for the dollar really appreciating from here?
Well, let's talk. I mean, you're kind of alluding to Brett's milkshake theory, which there's some validity to it. I mean, I don't know if you've noticed, but the yen is really getting hammered. Japanese yen, which was always the funding currency for the carry trade, and you want to talk about QE and balance sheet growth. I mean, they're the kings of the world. And Brett always said that the Japanese yen would go first, and he may be right. I mean, so all these paper currencies, in my opinion, are in trouble because they're all subject to the same issue, which is the governments can't stop printing. And to answer your first question, does the dollar go higher? Well, it could, and it's the old cleanest dirty shirt. And there's a lot of dollar debt, and so people need to buy the dollar to service the debt. So I try to stay agnostic on whether the dollar is going to go up or down versus the yen or the euro or other currencies. The currencies I prefer to compare it to, the ones I think really count, are the sound money currencies, and the three in that category obviously gold, silver, and Bitcoin. And I think the dollar is going to continue, I should say, to get destroyed in those terms. I mean, Bitcoin has certainly been destroying it, and gold and silver have been consistently, eating away at it. And if you look at a longer term time frame, it's been pretty destroyed. I mean, since 71, the dollar's lost 97% of its purchasing power. So, that last 3%, I mean, it's going away. The rate at which it goes away is debatable, but it's going away. And the reason is that they're trapped. I mean, they're a drunk and they can't stop drinking, and they're just going to keep hitting the bottle until they pass out or die. And passing out or dying means the currency is going to be worthless. And the timing is tricky, though. I mean, you can't bet at all on that instantly because there'll be. This goes back to the volatility charts, right? There'll be a lot of volatility. So, yeah.
Larry, I recently had a guest on named Tom Luongo, and he had mentioned that
great. Yeah.
that this part of Putin's strategy could be to undermine the Davos crowd. So do you see that as being a reasonable explanation for what part of his motivations could be?
I really do. I mean, it's interesting because you see somebody posted to me and said, hey, Putin is part of the Davos crowd. No, Putin wants to be part of the Davos. All Putin really wants, in my opinion, is he wants respect. I mean, he just, he's running a country. I mean, is he deserving of respect? I'll leave that up for everybody to determine. I mean, obviously, there are a lot of things wrong with his country, but he wants respect, and he feels like he's been treated like a second-class citizen, and he has been treated like a second-class citizen. I mean, all the agreements we made, all the things we told Brezhnev, et cetera, we haven't lived up to them. And I think what he has, what he's done is, as a chess player, he's figured out how to get into the right position where he can force himself into a seat at the table. And people may not like him, but they're going to have to respect him and pay attention to him. And it's interesting. I mean, some people are more practical about that than others. I mean, the Germans have kind of respected him because they kind of need him. I mean, if without that gas, Germany's going to freeze. And I mean, they need his oil, and so there's my sense is, I mean, obviously this war is a horrible thing and wrong, but what he's trying to get, in my opinion, he's trying to get a seat at the table of the monetary reset, which is inevitable, and he sees it. And yeah, the Davos crowd is really, I mean, I define them also as kind of the fiat money crowd, right? I mean, these are the people who've gotten really, really rich off the Cantillon effect, right? And so they've set up the system where, they run the central banks and they can borrow and they can't fail. I mean, I find it's shocking. Like I see Lloyd Blankfein holding forth on Twitter, on military strategy. I'm like, dude, your bank was bankrupt in 2008. You should be bankrupt. You shouldn't be living in a $50 million house in the Hamptons. You should be bankrupt. And yet the U.S. taxpayer bailed him out. And now he thinks he's got the right to tell us how to conduct military strategy. It's stunning. I mean, this is the arrogance of all of these people who have benefited from the fiat money game, and Putin sees it. He sees it. He was educated by Gata about how they were manipulating the gold price. I mean, he knows what's going on. He's not stupid. I mean, you can call him a lot of different things. One thing he is not is stupid. I mean, I recall seeing it, and I'm going to paraphrase this, but I recall seeing a written article on him where somebody was questioning him and going after the issue of, he poisoned some of his people, right? And that he thought were traitors and so forth. And he said, look, I'm not going to comment on that. And, not all countries are clean, this, that, or the other. But let me just ask you guys, how great a country are you? Let's discuss what happened in Dallas in November of 1963, right? I mean, he's not stupid, right? He gets it. The elites that run the world, they treat him like a second-class citizen, and he didn't like it. And, so you can understand why he's doing what he's doing. And ironically, it's a positive for the sound money case. I mean, again, I'm not endorsing his overall behavior. I don't know, I don't necessarily think he's a particularly good guy, but I do think on this particular issue, he's found a weakness in the West, and he's going to exploit it. And for people to underestimate him. I mean, I listened to the TV reports, and everyone's like, oh, he's crazy. I think the Western strategy, and Luongo was probably talking about this. The Western strategy is just to kind of get the oligarchs so pissed off that they run a coup and they take him out. I don't think that's going to work. I think he's got enough protection. I think actually even the oligarchs, enough of them are with him that he's not going anywhere. So he's going to be able to play this string out. And I think, the other error the elites are making, the Davos crowd is making, is they're quite arrogant. They're used to getting their way. They're used to saying this is how it's going to be, and that's how it is, because they have all the power, they have all the levers, they have all the control. Okay, fine. But what happens when your pipeline to Germany gets cut off, like there is zero gas coming through, and you can't run your factories, you can't heat your homes, you can't do it. I mean, that's a real issue, right? And so. It's physical. It's there. You just can't mess with it. You can say whatever you want about the guy. You need his friggin' gas. You're going to have to play monetarily in terms that he's willing to play on. And he has very clearly said, I'm not taking that paper money. You can buy rubles, support my currency and buy my gas, or you can buy gold and I'll trade you gold for gas. I mean, it's fascinating. There's a guy on Twitter named Lauren Boston who's done a great job of the math on this. And he shows you how, basically he priced it. He set the ruble gold price at just the level to kind of support where we are today. And then as the ruble gets stronger, the gold price will go up too. And, they're very calculating. They know what they're doing. And I suspect it's going to work. So I see nothing but higher gold prices for many, many years now. And I never could have, as last time you and I talked, we were kind of like, well, what would be the next thing that's going to make gold go higher? And I thought, kind of inflation, right? We'll just have continued inflation. And eventually the bond crew is going to go, you know what, this inflation is persistent. I don't want to hold these bonds. I'm going to buy some gold. And that's still true. That's still true. And that's still part of the case for a higher gold price. But boy, this really came in and accelerated it, in my view. I mean, we haven't seen it yet because we're stuck at, just sub 2000. At some point, in my opinion, we're going to get through this 2000. It's going to take off. I mean, we're going to be at 2,500, 3,000 before anybody knows what happened. And at that point, you're going to see real different behavior in the markets. So
that we'll start to see that real rotation of capital.
Yeah. I mean, you're already seeing it in a very, some people got the memo and are kind of figuring it out. You're seeing, I mean, the bonds, worst performing asset. This bond drawdown is a good chart on Twitter. This bond drawdown is the largest drawdown in history, really well since, no, I shouldn't say history. In the chart time frame back to like the early 80s. The bonds have performed, this is the worst bond performance last 3-4 month period anytime since then. And, I don't see any reason that's not going to continue. So you're already seeing people rotating out of bonds. It looks like, unfortunately, they're putting it into stocks because the stock market just doesn't seem, I mean, it went down for a while. It's been, going up like it's a scalded dog right now. And I don't know why. It could be just, it's arguably it's a crack up boom. But, I think that I think one of the things that's going to happen in the stock market ultimately is what the stock market has not seen is slower growth, which is inevitably coming because, U.S. consumers can't pay $5 to $7 for gas and not start driving less. And U.S. businesses can't, absorb all these increased costs and not start having, either having to push prices up so far that demand gets destroyed or, margins get destroyed. And so, the stock market was based on a really friendly deflationary environment with peak margins and peak multiples. And I think both of those are going to go in the other directions. Margins are going to come down and then multiples are going to come down. And so, John Hussman's done the best work on this. I mean, he thinks that, the stock market would have to fall 65% to get even into the reasonable range of valuation. And it could fall 80%. So, I think owning general stocks just makes no sense whatsoever. I mean, one could argue there are pockets, the commodity related stocks that'll perform well. You look at MOS, you look at some of the fertilizer companies that have been on fire. So it's crazy times, but it is one of those times. I mean, there aren't a lot of these in investing history because trends tend to persist for long periods of time. But I believe we are at an inflection point here that's a huge trend change, and there'll be some back and forth. But once it gets embedded, then you want to make sure you're on the right side of this. And this reminds me, I started investing in 79, 81. And it reminds me, at that point in time, stocks were the worst thing in the world. Nobody wanted to own stocks. And the reason is, during the 70s, they've been just total dog shit. I mean, you couldn't make any money investing in stocks or bonds, by the way. I mean, that's why bond yields were 14%. Nobody wanted to own bonds. You've gotten killed on a real basis in bonds and stocks. And yet, that started changing. The bonds started to rally. The stocks started to rally. It took time. And that in the early 80s, it took time. But once it got going, we had a 40-year trend of deflation. And I think that trend's over. I don't think. How can you argue that it's not over? I mean, it just the evidence is everywhere that the deflationary trend is over. Not that technology won't continue to create deflationary like things in technology land, but I think that the tailwind of a China price and a technology deflation and financial assets going up and inflation kind of anesthetized because, the QE went into financial assets and not into stuff. And we just haven't made enough stuff. Mm-hmm. And so, I think the next 10 years are going to be all about hard assets, commodities, and stuff. And if you're not investing in those areas, I think it's going to be a very painful experience.
So Larry, kind of to your inflation point earlier, what do you see as contributing to it at this point? The story of supply chains breaking down, is that still in effect here, or was that the kind of catalyst for basically higher PPI prices and now deglobalization and conflicts creating far more structural shortages than before?
Yeah, it's a great question. I mean, it's hard to pull out every string and know exactly what causes what. I mean, the price is higher. Is it because the money supply was up 40%? Or is it because, the docks in Los Angeles are backed up? Or is it because, the wheat's not coming out of, the Ukraine? Is it just front running? Are people saying, holy shit, I'm not sure I'm going to get this? I mean, I know for myself, I bought some things that I might otherwise not have bought, thinking to myself, you know what, this will cost more in a few years. I know I need it. I'll just buy it now. Mm-hmm. And that's how inflation, it's a psychological phenomenon in a way, right? Because, that creates more demand, and suddenly the demand's not where it was. It creates more demand, and, demand supply curves, if it can't be addressed, the price is going to go up. So, you're seeing it come into labor. It's obviously slowest in labor, but, the Deere strike, which led to, 5% a year plus, contract for those people, which is long overdue. I mean, unfortunately, the terrible thing about this for the average person is that, okay, so maybe you're getting wage increases now, but they're in the 3, 4, 5% range, and everything you buy is going up between 17 and 20%. So, the 5 isn't doing you a whole lot of good. It helps, but, maybe it's more than you would have gotten when we were in deflation. But it's hard, Tom, to tease out all the various pieces. And yes, certainly some of these parabolic moves we see are a function of, something getting shut down. I mean, you saw, I don't know, it was Spanish electricity prices when some pipeline from Morocco got shut down. I mean, suddenly they don't have any, and the price is going to go to the moon. I mean, and substitutes and workarounds. And, people are pretty good at reacting to price signals. You get high prices, and people are going to try and figure out ways to bring in supply. I mean, even, cutting off the gas in Western Europe, or reducing the gas sales into Western Europe. I mean, there's a lot of LNG going there now. But if you look at the math, I mean, it's still, they need a couple 100 million, however they measure, metric cubic feet or whatever it is. And the LNG can maybe give them 15 or 20. I mean, I don't have the exact numbers off the top of my head, but the point is, it takes time. It takes time to solve these supply chain issues. It takes time to provide, these workarounds. And yes, and there's deglobalization, and so some of it is, okay, well, maybe we're just not even going to buy it from overseas. Maybe we got to start fresh and build our capacity here. And you're already seeing some of that. I mean, I think it's really great that we're building a semiconductor fab in Arizona. I mean, Luke pointed out that, Intel's decided they're going to put a huge semiconductor fab in Ohio. I I mean, how great is that, right? I mean, how many, what new facilities have been created in Ohio in the last 20 years? I mean, it was all the other way, right? And so, if we let a neutral reserve currency come into being and we fix the money, which is broken, and we fix the interest rate structure, which is broken, we will all live better, because a system, a capitalist system based on the correct allocation of capital will make more stuff for less, which is really what it's all about: increasing productivity. You want to have, we don't need higher prices. You don't need Keynesian inflation. That's bullshit. Keynesian said, well, if you don't have 2% inflation, you don't have animals for. No, that's total horseshit. What you need is more stuff at the same cost or less. You need productivity. I mean, people want things and they want as much for less effort. And the way you do that is you do it by intelligent investment. You put the money where it's going to get the greatest return. So the capital, the savings and capital flow to the areas with the greatest return. The further problem is when you take the money and you bastardize it by saying money's free through ZERP for 20 years, people spray money all over the place, and you get NFTs and you get Dogecoin and you get a bunch of horse shit. You get a bunch of investment in crap that doesn't make the world better. I mean, we should have been investing in, natural gas. We should have built the pipeline from Canada. We should have, there are all kinds of things we should have been doing. Nuclear power. Innovating in nuclear power, yeah. Yeah, there are a million things we could have done that would have looked like the best economic use of the capital if all of the prices had been right. Even the fracking industry, it created a lot of supply. But if you actually look at the net cash flow of all the fracking companies, it hasn't been positive. And again, I think what happened there is some of that, what they did is they took on malinvestment marginal projects because the capital was free, and so free capital in and of itself messes things up. It's like throwing sand in the gears, and the money goes in the wrong places, the wrong things get built. You're wasting your seed corn on stuff that won't grow, that won't make the economy more productive, that won't give us more for less. We want productivity, which is more for less. We want deflation, not inflation. This Keynesian thing, it's just a lie. It's a complete and utter lie. But I'll tell you who it's not a lie for. It's not a lie for statists. It's not a lie for Paul Krugman. It's not a lie for economists. It's not a lie for the Federal Reserve. It's not a lie for all the people who benefit from that system. And that's what we've all figured out. And so, what we're all saying, and Putin has actually joined us monetarily, we're all saying, no, we're not doing that shit anymore. Yeah, right. Okay, yeah, good. Fine. You keep playing your games. I'll take my Bitcoin and gold and silver, please. Thank you very much. I'll own my real stuff. You guys can own stocks and bonds and fiat wealth, because we think that's going to melt, and it will. It really will. That's what this fourth turning is all about. And the good news is, on the other side of this fourth turning, it's going to be a much better world. When we get this thing back to sound money, I've studied hyperinflation. I've read all about all the cases, and what you see is that unless you get into shooting wars, which sadly we're in one, it could become bigger. But unless you start killing people, when the money becomes sound again, when you reset to a sound money, things go back to normal. Not instantly, but people are inventive, people are creative, people are smart. Technology is progressing, things are getting better. But you can't take a system and mess up all the inputs and expect it to be a good system to give good outputs. It's not going to happen. We got to go back and fix the system so that the inputs are sound. And when we do that, then things will get a lot better. And so that's what I'm looking forward to. And that's why actually I argue, like, bring it. Let's just, this thing's a mess. Let's just rip the Band-Aid off. Why go through 20 years of suffering? Let's go through, let's do it quickly and get back to sound money, because we'll be better off when we are. So,
Larry, you mentioned the term crack up boom. So can you define that for us? And sure. do you see that happening?
It's a possibility, and hyperinflation is a possibility. I tweet a lot about hyperinflation chart of the day and stuff. And is that really going to happen? I don't know. It's obviously not a 90% lock. But I don't think it's zero either. I think that, there's a chance of it, a real chance. It's perhaps as high as 20, 30, 40%, maybe even higher. A crack up boom, though, let me answer that question for you. A crack up boom is what happens when the money when it's very clear to everybody. And this is another thing I will add. So if you study hyperinflations and you look at the inflection point where they go from hyperinflation start out as no inflation, then they go to inflation, then they go to pretty high inflation. Okay. And from high inflation, where it becomes hyperinflation, is when a majority of the people realize, they come to their conclusion, they say, holy cannoli, they can never stop printing. This is going to continue forever and it's going to get worse. And that triggers what we all call Gresham's law, which is to say, oh, okay, if they're going to never stop printing and the value of this money is going to continually fall, get me out of this money. It's just like self-preservation. The money's on fire. Give me something else. I mean, you'll buy stuff you don't need just because you know on the other side it'll have value. And so that's a crack-up boom where everybody, as quickly as possible. I mean, in the Weimar example, people were getting paid in the morning. They were immediately rushing to the supermarkets to buy food because the price was going up every single day. And that's obviously not happening here. Inflation's high, but you're starting to see some signs of that. I mean, I think it's happened in the housing market to a degree. You know, people are buying houses because they can borrow against them at what used to be low rates at 3%. Now it's closer to 5%. And it's a real asset and you can use it, you need it. Of course, you got to pay tax on it, but, and so the people are, they're buying stuff. And so a crack-up boom is just that concept taken to an extreme where literally everybody's trying to buy stuff because they know that the dollar is doomed, that all fiat currencies are doomed, and probably the best place to look for a crack-up boom are two things. One is the stock market going up relentlessly. Check, we kind of got that, although we saw a pretty big dip here, but it seems to be coming back. And then probably more importantly is the bond market, because, in this kind of inflationary environment trending towards hyperinflation, the biggest, riskiest, most terrible investment to be in is bonds. I mean, bonds are just, certificates of confiscation, right? That's what, Henry Kaufman called them. I mean, and then they are. I mean, your bond, you're going to pay $1,000 in 5 years, but, that's going to buy you a tank of gas. So, as the bond market sells off and as interest rates go higher, that's another very strong indicator that you're going towards a crack-up boom, which, as I think we've discussed before, that has been happening relentlessly now in the 10-year, which is probably part of the reason why gold's a tad soft. And, as that continues to happen, they're eventually going to have to either do yield curve control or, the whole bond market is going to just, we're going to be at 9 or 10% interest rates. And you want to talk about the economy, cratering. I mean, I don't think this country can handle 3, 4, 5% interest rates. We're on the 10-year, we're kind of in the 2s. 5 to 10, forget about it. I mean, the whole country is bankrupt. There's just too much debt. The government's bankrupt. I mean, at that kind of number, the interest on the debt would be, equal to nearly the size of the entire budget. I mean, not quite. At 10%, it'd be $3 trillion, which on 30 trillion of debt. But we're spending $5 trillion, so that's a huge number just to pay an interest, right? So
I think every percentage point is something like $300 billion just to service the debt.
Right. So take it up from where it is today, from 2 or 3 to 10, add 7 times 3, that's another $2 trillion of interest costs. So they can't have that. So, okay, so what we're all kind of waiting for is the next Fed move. I mean, right now what we've got is tough guy Fed, with Powell saying, I'll do whatever it takes. we're going to have 9 rate hikes. I'll do whatever it takes. But by the way, we're only going to start at 25 basis points, which is just a joke, but whatever. But now I see it's factored in. They're going to have between 7 and 9 25-point hikes. And I don't think there's any way they can. I mean, if they do, I think the economy is going to be, it's going to completely crater. I think the stock market craters. I think the bond market craters. And one of the third Fed mandate, the original 2 Fed mandates were inflation and full employment. They've clearly adopted a third mandate. They've said it many, many times, which is continuous functioning of markets. Mm-hmm. And in March of 2020, when the bond market went no bid, they had to step in. And so if these kind of things continue and interest rates get higher and things really start to break, quote unquote, and fall apart, they're going to have to step back in and print more money. And I've been maintaining that this next pivot is going to be their last, because they're trying to gracefully exit. The last time they tried this, they had the repo blowout, back in 2019, and they've had other problems when they tried to do it. They had the first Powell pivot in 2018 when he said everything was on autopilot and the market went down 20%. So, no, maybe it's not. And the next time he pivots, I think just more and more people are going to realize that, Jesus, they can just never stop. The way the system is constructed, they have to keep printing. And this is what Richard Russell used to say, inflate or die. I mean, we've got two, it's sadly, and, even a lot of smart people and well-known people and high-profile people are starting to talk about it. I mean, L. Arian is saying he's about as high-profile insider as you get. And he's saying they got no good choices. I mean, on one side, they've got, they can be soft and not crack down and, okay, maybe the economy will keep going, but we're going to have a lot of inflation. On the other side, they can crack down hard, but we're going to have one hell of a recession. And I think it's a recession that turns into a depression with these kind of debt levels. So, I've said they're driving a clown car between these two guardrails of massive inflation or massive deflation. They kind of bounce off one, they bounce to the other. But I think the next time something breaks, when the inflation becomes more persistent and, they keep trying to fight it and then something breaks, they're going to pivot and they're going to come back with YCC, which is really just QE. There's only one way to keep rates down. That's to buy those bonds. There's no natural buyer for those bonds. The only buyer is the Fed. They're going to print the money to buy them. And when they do that, more people are going to come to the side that you and I are already on, which is, holy shit, they can't stop. Mm-hmm. And as I was saying earlier, the Reinhardt and Rogarth book on hyperinflations, which is brilliant about this subject, said they occur when half the people or more realize they can never stop.
Changes that time preference of their
they just currency. Can never stop, and people are just like, holy shit, we got to get out of our, we got to get into real stuff, and enough of them. And at that point in time, you get a mad rush for the exits, and it can happen pretty quickly. I mean, and there are recent examples like Turkey, other recent examples of Venezuela. There's the Weimar example. There are plenty of examples of this. I mean, when, people have confidence in the dollar because it's been a reasonable thing to do looking backward, but looking forward, I think that confidence is slipping. And to me, the two best confidence indicators are the price of gold, which they manipulate. They know that. They have to manipulate. I mean, Volcker said it in his memoirs, the big mistake they made in the 70s was not being all over gold more, mm-hmm. right? And the other fire alarm, as Luke says, is Bitcoin. And so, you'll know what's happening because the price of those things will be going up relentlessly. And, they already have been going up quite a bit. But it'll start, gold will break through 2,000, and it'll rip to 3. Bitcoin will take out the 65 and go to 150 or towards 150. And, there'll be panic bells going in Washington, D.C. They won't know what to do. They'll be trying to blame Putin. Hopefully nobody's stupid enough to escalate the war. But as Luongo says, I mean, these neocons are nuts. I mean, I pray that we don't get into a bigger war, but, what they should do is reset the currency, but my gut is they're not going to do that. They're going to let it happen, naturally. And then the currency is going to reset itself, which is everyone's going to abandon it. And we're going to have to go to a different currency system.
So in this type of scenario, Larry, why do you see owning stocks as being advantageous over bonds?
Oh, obviously. Yeah, that's a great question. It's important. So, I mean, you study Weimar too, you can see this, like, Daimler-Benz and that was a small company, but Siemens, one of the big industrial company back then, and the steel companies. So a stock represents a claim on the earnings power of a business, right? I mean, they've got assets and employees, and they bring things in and they do something with them and they sell them. And so you own equity in a company, you have a claim on the earnings power of that business. Hyperinflation is going to hurt that business for sure, just because the economy is going to get all messed up. But on the other side of the hyperinflation, the company's probably still going to be there if they didn't go bankrupt, and you're still going to have your share of it, and they're going to reprice in the new currency. So you've got a claim on an enterprise that could make, money even after the hyperinflation occurs. The bond, it's like, that paper is going to become worthless, right? The bond is, it's a currency that failed, and those failed currencies, I mean, you can buy Zimbabwe $1 billion notes for, pennies on the internet because there were a gazillion of them. And so they're like monopoly money. And so the bonds represent a claim on the underlying value of the currency. The stocks represent a claim on the underlying value of a business. Having said that, though, even the stocks, they can go down a lot. I mean, when you have a hyperinflation, I mean, yes, the stocks, let me say it a different way. I've studied hyperinflations, and what you see is the stock markets can go up quite a bit, but they still underperform sound assets. In other words, oil, gold, stuff goes up even more. Mm-hmm. and they may lose some of their value in the hyperinflation. Generally, they get it back, if they don't end up being companies that went bankrupt. But stocks are clearly, the obvious takeaway from this is an investment advice. Everyone makes their own decisions, but the obvious takeaway from this, bonds are just the worst asset class in the world. I got an email from the other day from one of these brokers, is the standard kind of 60-40 thing. At your age, you should be thinking about bonds. I was like, are these guys nuts? These guys are got to be crazy. And it's sad too, because I know people who are retired who have a fair amount of their money in bonds, and it's not going to work out. It's just really sad, but that is what it is. This is a once in 100-year event. The last time this happened was in the 20s and 30s. And, nobody who was alive then is alive today to kind of see this happening. And so that's why it's hard to figure out and hard for everyone to prepare for. And most people look in the rearview mirror, and the rearview mirror has been okay,
So Larry, earlier you mentioned the nickel market on the LME that was halted. So tell us what you can about that. And if you do think, as you did kind of mention there, that you think this is, a sign of things to come for other commodities and metals.
Yeah. So that's a great one. So that's an amazing story, right? Because there are a lot of different little nuggets buried in there. As people who aren't familiar with it, nickel just did a complete moonshot, and because a guy in China was on the wrong side of it. And by the way, his broker was JP Morgan. And so by definition, they loaned him money to be on the wrong side. By definition, I heard JP Morgan was looking at a multi-billion-dollar loss. And, they did what elites and financial market, participants have been doing since the beginning of time, which is this guy was winning. Somebody was on the right side of that trade, should have made a ton of money, very much like GameStop or a lot of these other things. And they changed the rules. They shut the market down. They said it was liquidation only. They increased the margin requirements. They broke all the prior trades. I personally had experience with this. A lot of people know this. In September of 2080, they outlawed short selling financial stocks in the United States, and I was short financial stocks, and it hurt me very badly. But they did it at the Hunt brothers. This is what they do, and this is why at the core, the safest assets are bearer assets that you control, that they can't really change the rules on, that you can hide from them. Which the two best in that category or three best are gold, silver, and Bitcoin, right? Because they don't. The house doesn't like to lose, right? And so. They're losing, and they changed the rules, and they screwed these people in the nickel market. Could this happen in the silver market, gold market? Absolutely. I think it might happen. They're bigger markets. Nickel's a smaller, thinner market, and that probably, is part of the reason why it was more likely to happen there. But, there are a ton of gold derivatives out there. There's a ton of paper gold out there. And when you see what I described earlier, which is the 50% of the people realize that the fiat money is becoming worthless, some part of those people are going to say, give me gold. They're going to go try and get hold of that gold. And, the paper, if there are 100 claims for every ounce in existence, which I've heard credibly presented as possible, that's a lot of people who aren't going to get a chair when the music stops. So, it could happen. Now, beware, because if, for example, you hold GLD, which is the biggest US gold ETF, and you read the prospectus and you realize that they have all kinds of outs in the prospectus, if gold were to one day, we were to wake up one morning and gold were at $10,000 an ounce, I suspect what would happen is the GLD letters would get GLD holders would get a letter, and the letter would say something along the lines of, dear holder, please find a check for your position in GLD at yesterday's closing price of $1,800 an ounce. Fund is declared force majeure. We're unable to provide you with your gold. And should have read the prospectus, right? And so that's why you want to have the gold in your possession, and it's going to make a real difference. And they'll probably try and change the rules when that occurs as well. But again, even nickel, I know I read this morning, they haven't gotten it all the way back down to where it started. They're still having trouble with it. It's still a real problem. They haven't sorted it all out. It's interesting. It's very interesting the way these derivatives have allowed people to manipulate these markets into prices that don't make any sense. And then when suddenly the market wakes up, it's the assumption of, the efficient market hypothesis says that everyone kind of assumes continuous market pricing, just that, things don't. But when you fake the prices, and then suddenly it's like you take the blinders off and everybody wakes up. Guess what? It's not continuous anymore. I mean, I don't have the chart in front of me, but nickel went from, I'm making these numbers up, nickel went from $1,000 a ton to 5x that in days or weeks. And it was crazy. It's absolutely crazy. So, and that could happen in other areas as well. And I suspect it might. I really do. I'm not betting that way. I'm not counting on that. But it's certainly, there's another great quote that I picked up off the web somewhere, and there's a fellow who's very wise in this area, and it says, gold will only reset once in your life, and once will be enough. And I personally do think we are going to see much higher gold prices. I mean, not even as Luke likes to say, not even in the same zip code as where they are now. I mean, I think 5,000 is just like, that's just jacks for openers. Mm-hmm. We could see 10, 15, 20, $25,000 an ounce for gold. I truly believe that within a 5-year time window, something like that. And in turn, same true with Bitcoin, even to a larger degree, because it's a faster horse. I mean, I think Bitcoin will be hundreds of thousands per coin relatively soon, sometime in the next year or two. And I think it'll be millions of dollars per coin within, 5 and 10 year windows. So, to me, it's just a no brainer to own some of these things. I mean, you don't have to take 100% of your net worth and put it into them. But I tell my clients, and I have a lot of them who were skeptical of Bitcoin. I said, look, just get some. Don't have zero, because it's at 47,000 today. I mean, if I'm telling you about it, I'm pounding the table, I'll explain it to you. If 5 years from now, that coin that you could have bought for 47,000 is worth $3 million, and you didn't buy any, you're going to have regret. You're going to experience serious regret, and all you can lose is the 47. And I don't think you will. I mean, you got to be prepared for a 50% drawdown, because those things happen a lot, and that's the tricky part. I mean, people. It's sad when people get talked into Bitcoin and there's a drawdown and they get scared and they blow it out. Mm-hmm. I mean, I dollar cost average or I buy the drawdowns, but you got to recognize what it is. It's very volatile, but so
Larry, the last time I spoke to Luke, which was a couple of weeks ago, he kind of brought up the idea that, with Bitcoin and or gold or silver, you have to be in some ways prepared to not be able to use that asset class because they changed the rules as we were just speaking about. So do you see more of a risk, let's say, in Bitcoin versus gold or vice versa anywhere there?
Yeah, it's a great question. And it's interesting. I mean, I have got a very savvy friend who's rather cynical, and he thinks they're going to come after all three of them. Mm-hmm. He really, I mean, the gains are going to be so large that the Elizabeth Warrens and the AOCs of the world are just going to come after all of us in terms of taxes and everything else. I mean, and so, the Bitcoin blockchain is there. You can kind of see it. Now, you don't know whose address is whose. I suspect they'll change that. I think they're going to come out with a law that says you got to report your address, report what you have, which is an argument for getting things into deep cold storage now, which many of us have done. There's an argument for having your gold in your possession in places where other people don't know where it is and, no records of it. I mean, look, governments do what they need to do to perpetuate themselves. If you read the Fiat Money, Inflation in France, book, which is free on the web, by the way, you'll see that, when the assignat was failing, the government was literally executing people who they found who had gold and had not reported it, right? And I'm pretty sure the narrative at that time is going to be something along the lines of, yeah, we had this great Keynesian system going and the world was a wonderful place. And these damn sound money people came in and they totally screwed it up, mm-hmm. And they got filthy rich. And by the way, that's totally unfair. And therefore we got to tax them and take all that shit away from them. Mm-hmm. So, and then those of us who hold those assets are going to have to make a tough decision of whether we want to stay in that country and whether we want to comply with their illegal rules. And, mm-hmm. and we'll all have to make our own decisions on that. But the point is that, these governments are not our friends. And we have to act and behave in a way where we know that, and we have to be prepared. I mean, if the government says to me, tell me what your wealth is, send it in, I'm not sure I'm going to comply. Mm-hmm. And if you want to talk about, ease of hiding and ease of movement around the world with wealth, the Bitcoin case is probably better than the gold case because it's not heavy and, 12 words. And a treasure, and you can skip the treasure. You can pick it up whatever your new country is. 12 words, you got access to your coins, mm-hmm. right? And
to your point there, Larry, we've heard murmurings this week about Biden wanting to raise taxes on anybody worth more than 100 million. Like, at what point does that really start to that level really start to ratchet down?
And it's a slippery slope, right? I mean, in 1913, they introduced the income tax, was for the top 10% of the country. Well, guess what? We all pay income tax now. If we have hyperinflation, we're all going to be worth 100 million. So, look at the Zimbabweans, right? And the Venezuelans. I mean, it was awful. He wants to have a wealth tax. They want to tax unrealized capital gains. I don't even know how you do that. How do you value the thing? I mean, look, and obviously none of those things are going to go through instantly. But, when you hear people talk and when you listen to the political chatter, and it gives you a sense of the direction things are going. And so what I take away from it is, okay, that's fine. That's the way you guys want to play it. That's fine. You play it that way. I know what I am going to do to protect myself, because I'm 64 years old. I've worked hard to earn what I have. And, you've already taken a lot from me. You hurt me very badly when you changed the rules in 2008. And guess what? I'm not going to let you take this from me. I'm just not. And I've devised a strategy to ensure that that's true. They may decide, okay, Larry, you're a criminal. I may say, fine, I'm not sure I want to live in your country either. There will be other countries that'll be much more freedom oriented. I live in El Salvador or something. I mean, so it's, but the good news is, again, not again, because I haven't said it yet, the elites are a small part of the total country. Your country and my country. I mean, your country's not full of Pierre Trudeau's. Your country's full of hardworking, honest Canadians, who probably think what he did was outrageous. And my country's not, AOC and Elizabeth Warren, who want to take away all the wealth of every wealthy person. It's the same thing. It's a bunch of hardworking middle-class people. And so, they're going to mess this system up so badly. They're all going to lose political power. And, the next set of politicians are going to come in and we're going to say, hey, look, they really screwed up. Here's how they did it. Here's why they did it. It's horrible. We're going to fix it. We're going to go to sound money, and the world's going to be better. And that's how I see it. I mean, arguably naive, and I'm sure it'll be messier than that. But the point is, there is a march of human progress here. And, I'm not bearish on the human race. I'm not bearish on conditions. I think we will make it through this and things will be better. That's my view. But I do think there'll be a big difference in terms of the making it through. There'll be a big difference whether you understood these issues or not. I mean, I think that, your kids and grandkids, are going to, you want them to someday be saying, God, that old fucker, he was kind of smart. I'm sure glad he understood what was going on, because, we're middle class, or we're relatively comfortable, and we wouldn't been if he held all bonds, like all these other people who just got wiped out. You know what I mean? I mean, there were, the stories in Germany were horrible. I mean, these really upper middle class, very wealthy people who just wiped out. Just totally wiped out because all they had were bonds. Right? So, and that, that could happen again. I think it will happen again. It's having some assets in sound money investments is probably, in my opinion, investment wise, is the most important thing anybody can do right now. And, and I obviously advocate for more, but it doesn't even have to. I mean, even if it's only 10 or 20% of your assets, that'll go a long way towards protecting you.
Yeah.
In my opinion. So.
Larry, one of the last points I'd like to kind of hit for today is to ask you about kind of the performance of the gold and silver miners this year. Do you think their behavior so far has yet to confirm higher gold prices, or are they still a great buying opportunity at this point? Yeah, so there's still a great buying opportunity. A lot of things trading at low multiples of cash flow. They really haven't taken off. They've kind of lagged the metal, and they've corrected off of the highs that they were experiencing in July and August of 2020. So I think it's a great time to be buying them. And I think they're an outstanding place to be. They will provide multiples of the underlying appreciation in gold. I mean, if gold goes up 10%, the miners go up 30. It's generally 3x leverage. And, I got miners that are doing great at 1900. I don't need higher gold prices. These companies will do well. There's a lot of operating leverage. We've had this discussion. I mean, you take the price of the metal up, and yes, the input costs are going up, especially CapEx. And yes, the price of oil is going up. That'll add to their operating costs. But it's a small enough percentage. It doesn't go up as fast as the overall metal price. And, $3,000 gold, my portfolio is going to just zoom. And these stocks are going to just zoom.
Having said that, it is important to pick the right ones. I mean, there are lots of companies that aren't any good. So, you got to do your homework on the gold mining stocks. But I think the miners are a great place to be invested. And obviously I'm talking my book, right? I've got a fund that's basically full of gold and silver miners. Mm-hmm. And I would caution, though, I would say not every single miner is a good place to invest. I mean, if it really is a bull market, they'll all probably work to some degree, but buying the higher quality things will make a big difference too. Mm-hmm. So.
Absolutely. Excellent, Larry. Well, I think that's a fairly good place to wrap up. Of course, your website is ema2.com, where you post all your quarterly letters. Are we looking forward to the newest one being out here?
I'm writing. Yeah, you probably heard most of it just now. I'm writing Q1. We're up a little bit for the quarter, not far. I mean, it's not too late. I will say that it's really not too late. I feel like we're right on the launch pad here. We need gold to take out 2,000 with authority. We need silver to take out 27 or 30 with authority. And I think when that happens, it's going to feel kind of like what happened in the summer of 2020. Things are going to kind of take off. Mm-hmm. I'm also very, as you know, I'm a loudmouth on Twitter. So, at Lawrence Lepard on Twitter, you can, I try and post as much as I can about all sound money related stuff. But the newsletters are free. You can join the mailing list. Just type your email in there. We don't spam you. You'll get a copy of the newsletter every time we send it out. So,
yeah, absolutely. Excellent, Larry. Well, I really appreciate your time today.
Yeah. Well, thank you. I always enjoy talking to you, and it'll be fascinating to watch, right? The next year, this year is going to be wild. I think we're going to be surprised. I really do.
Well, it'll be interesting to see what's changed by the next time we speak.
Exactly. Okay.
Excellent, Larry. Thanks so much. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.